Hi, this is Amur with the Bulletin Board Heroes here at Vox Markets. It's the weekend edition, Sunday, the 10th of July. Starting off with the Ftse 100, where we've had a couple of attempts to end the week to break that line of resistance there from the beginning of last month. 72.20 is the level that needs to be broken. End of day close above that. We're going to be heading up to the 200-day moving average around 73.50, which is where we were towards the end of last month. Otherwise, we risk another test of the 2-year uptrend line, which has held steadfastly over the last few weeks. But as you can see, it really started there in from March going through October 2020 and then on to the lows that we've had recently for June and July. Above that particular line, still got the chance, very optimistic chance maybe, of hitting the top of the channel or 8,000, but I think it's a brave person who suggested that that might be seen anytime soon. But the first step here to break that June resistance line at 72.20. Moving along to Bitcoin, where we still see the consolidation occurring, the lower levels. The recent range, 19,000 to 22,000, that hasn't really changed. The top of that falling March trend channel now around 23,000. After that, we've got resistance at the 50-day moving average. That's just under 25,000, and then the old May rather low there at 25,400. But 19 to 22 there, break of 19 could take us down to the floor of that March channel. Currently pointing, well, rather low actually, but towards the 15,000 area would be the initial support there if 19,000 gave way. Moving on to the stocks, and got a little bit of action here on Amur Minerals. Obviously, we had all the excitement with the potential takeover of the company. Current situation is that we've broken a line of resistance from May, and actually had quite a strong day on Friday. Actually gapped higher, which is impressive. We had an old low there at 0.7 pence. We actually temporarily broke it on Wednesday, so it's a bear trap gap reversal. One of the stronger signals. Initial target would then be assumed to be around 1.04 pence and the 50-day moving average, and that's backed by the presence of bullish divergence of the lower lows there for July, but RSI holding firm near the oversold levels around 30. Moving along to a stock which has been firing away quite nicely on the fundamental front and starting to give us some action on the technical front here as well. We've got that April resistance line, which was broken around 11.5 pence. We closed above that for the week, basically closed on the 50-day moving average as well. Should give us scope over the near term, maybe the next week or two, to get up to at least post-May resistance at 13.5 pence. We're backed by a line of bullish divergence rather in the RSI window. That's there from March, so that could power the shares not only to 13.5 pence, but then maybe up to April resistance 17 pence by the end of next month. But ideally we hold above 11.5 and that broken resistance line. Onto a stock which is rather more obscure, DigitalBox. Here we've got a classic trend line break. We've got a good rising trend channel there as well. So that's a rising trend channel from September. Had a good support there in May and June, and then we pushed through the 50 and 200-day moving averages. The 50-day line crossing through a rising 200-day line, which tends to be a bullish signal, and that's actually worked for the end of the week. And then the assumption now is above 11 pence, and that February resistance line we could head up to 18 pence maybe by the end of next month, something along those lines. Final plus point, the bullish divergence line there, so the lower low for June, but a higher RSI. On to Eurasia, which had a rather good week last week, perhaps against the odds and against the wishes of some following the stock. But here we've seen that we closed the week powered by that bullish divergence line from February, bouncing off the floor of that triangle from the end of that month. And looking at the detail, quite a decent candle, just closing just below the 50-day moving average at 7.2 pence. I'd like to see an end-of-day close above that to deliver a potential move to the resistance line there from back in April as high as 9.5 pence, maybe as soon as the end of this month. But everything here really depending on an end-of-day close above that 50-day line. At this stage, only well below 6p. and the old May and June support really delaying the recovery for the shares. Iqai is next, and here we've got a situation where the shares bounced off the support line there from October, bullish divergence there, so a nice higher RSI traced, albeit in oversold territory, and we've zigzagged up to the top of the falling wedge in place since the autumn. Want to see an end of day close above 3.8 pence, or 3.75 at least, which is where the line is. That could take us up to around the 5p area, and the 200-day moving average still falling in that zone. Ideally, there's no end of day close back below, let's say 3p, which has been the recent support area. Moving on to Jangada, which looks like it's going to have a bit of a bounce, another falling wedge here, breaking that line of resistance there from April. That was around 3.6 pence. And above that, looking for a return to post-May support, or May and June support, early June support, around the 4 3/4 pence level. But what will be interesting to see here is how much of a snapback we get. With that extended bullish divergence line there from November, we could actually and should head to 5 and 5.5 really. That would be the expectation with that kind of setup. Onto a stock which has caused people some anguish perhaps over the recent past, or at least over the much of the last year. What's interesting here for Midatech though is that we bounced quite well off that February support line. We've got very strong bullish divergence there as well, an uptrend line in the RSI window from May, and to cap it all, the bear trap rebound from last week, or during last week, narrow bear trap there from below the June support there at 8.31 rather. Two unfilled gaps to the upside, so that's a double bear trap gap reversal, and the view is that at least while we're above the floor of the first gap, 9 1/4 pence, we could retest some or even all of that retracement back from the June peak at 15 pence. So punchy call there, but yeah, we have seen some setups like this work quite well in the recent past. MyHealthChecked is the next contender, and here we have another trendline break after a bear trap, narrow bear trap for July and June, or rather June and March rather. Here we've got a situation where there's the break of that resistance line from November, 1.64 pence or 1.65 pence, let's say, and above that looking for at least a retest of the 2 1/4 pence area, which is post-March resistance, in fact post-January resistance. So let's see if the turnaround actually kicks in. Ncondezi is the one we're looking at next, and here another trend line break after a lot of consolidation in the lower area, so between 0.5 and 0.8, let's say. Good weekly close above the 50-day moving average at 0.8, and above that we're looking for at least a retest of May resistance around 1 1/4 pence by the end of this month. Nice uptrend line in the RSI window as well, so that's providing the excuse for momentum. The other point to note is that we managed to bounce in July above the floor of that gap there around 0.6 pence, which is, and very often is, a decent sign that the bears have finally run out of steam. Much requested stock is coming up next, Petropavlovsk. Here I've been dithering in terms of looking at it, because obviously the Russia-Ukraine situation, not an easy backdrop to grapple with, but we've got an uptrend line and a bullish divergence line there from back in March. That is a positive. We've got a broadening triangle as well, which can be drawn from the middle of May. And the setup for the end of last week, or from the end of last week, is a bear trap reversal from the June low, the middle of the mid-June lows. They were around the 1 penny level, and 3 days or so below that, and then the shares have pushed back up again. And the close on Friday, a very strong one, so we opened at the low, closed at the high, and left at the gap there as well. So above 1.16, looking for a decent recovery here, perhaps initially 1.5 at the 50-day moving average, but it'd probably be disappointing if we didn't actually head higher, maybe up to 2 pence or even 2.5 pence over the next 4 to 6 weeks, given that setup for POGs at the moment. Always difficult to work out exactly where a stock which is in decline will actually finally turn around. Here we were looking for perhaps Tirupati to find support just below the 30 pence area, so 28, 30 pence, something like that. We've actually fallen below that, and actually the RSI here now very low indeed, now down to around 13, as low as it was on the initial push down that we had there. That gets us into extreme oversold territory, so one would expect at least an intermediate positive reaction, even if that doesn't happen until we hit the floor of the channel there, and that support line there from September around 24 pence, so 23, 24 pence, maybe the risk there. But if we go that low, then there could be a turnaround for the shares, given how far and how fast they have fallen in the near term. Stock which was previously not looking and behaving very well was Verditek, but there are lots of interesting price action here. The overall thing here is that we've had a bear trap from below the March low, 1.8 pence, and that sort of came in as a support after the brief spike that we had in the shares, so really gapping up and down all over the place. What is useful here, and has been over the last week, is that we've left a gap over around the 1.8 pence level, and above that on an end of day close, looking for at least a retest of that previous spike around 2.85, and if we can clear that, then one could probably say that we've got a sustainable recovery here for the shares. But at this stage, 2.8, 2.9, the target there for Verditek. That's it from me today. More updates during the week.